The savings in your bank account, the stocks in your retirement fund, even the dollars in your wallet. They might not be as safe as you think, because right now, in this very moment, the foundations of our financial system are cracking. Behind the headlines, behind the noise of Wall Street celebrations and crypto hype, a dangerous reality is unfolding. The United States is over $36 trillion in debt, and to solve it, the government may have no choice but to destroy the value of its own currency. This isn't a prediction, it's already happening. And if you aren't prepared, the consequences could be catastrophic. Let's begin with the hard truth. The United States is bankrupt in all but name. 36 trillion. That's more than the GDP of the entire US economy, more than any country in human history. Even worse, that number is growing by the second. Trillions added every year. What caused it? Decades of spending, unfunded wars, massive tax cuts, endless stimulus packages. Both political parties are guilty. Neither wants to stop. And now, the only escape left is inflation. The government hopes to pay off its massive debt with cheaper dollars. But to do that, they need interest rates to fall fast. And that's where Trump and the Federal Reserve come in. Trump as Powell. Donald Trump has made one thing very clear. He blames Powell for raising rates. He said publicly that Powell is clueless and a disaster. And he's promised to put someone in charge who will slash rates aggressively. But here's what you need to understand. This isn't just politics. It's economics. Lower interest rates would make the government's debt much easier to manage. It would allow Trump to fund tax cuts, military spending, and stimulus without worrying about the bill. But cutting rates now would have a side effect: massive inflation. Let's imagine the scenario: Trump wins. Powell is gone. A new Fed chair is installed, loyal to Trump's agenda. Rates are slashed. Liquidity floods the market. Stocks soar. Real estate booms. Everyone cheers. But behind the scenes, the dollar begins to die. Because with interest rates at zero, or even negative, there's no incentive to hold dollars. Foreign investors flee. Gold surges. Commodities rise. And inflation returns with a vengeance. Sound far-fetched? It's exactly what happened in the 1970s. And the signs are here again. The dollar has been the world's reserve currency for nearly 80 years. But that era is ending. China, Russia, India, and even traditional allies are moving away from the dollar. They're buying oil in yuan. They're settling trade in local currencies. And central banks are stockpiling gold, not dollars. Why? Because they no longer trust the US, not its economy, not its leadership, and certainly not its currency. When your national debt is $36 trillion and your leaders talk about printing more, confidence vanishes. The rest of the world is watching, and they're preparing for a post-dollar world. Are you? On the surface, everything looks fine. The Nasdaq is up. The S&P 500 keeps hitting record highs. Tech stocks are booming. Artificial intelligence is the new gold rush. But here's what they don't tell you. Most of these companies are massively overvalued. Their earnings can't justify their prices. Their growth projections are based on fantasy. And investor sentiment is being driven by fear of missing out, not logic. This is what a bubble looks like. In 2000, the dot-com bubble burst and wiped out trillions in value. Back then, at least the internet was a real innovation. Today, many high-flying companies aren't profitable, and some don't even have a clear business model. We're living through a dangerous illusion. The market has been distorted by years of cheap money. Now, any sign of a rate cut is taken as a reason to go all in. But the higher the climb, the harder the fall. There's another silent killer in the stock market: corporate debt. Many companies borrowed heavily when interest rates were near zero. What did they do with that money? Did they invest in growth, innovation, workers? No, they bought back their own shares. Stock buybacks artificially boost stock prices by reducing the number of shares in circulation. It's a trick, and Wall Street loves it. But now, those debts are maturing. Interest rates are higher, and companies are starting to feel the pressure. Default risks are rising. Layoffs are increasing, and the facade is cracking. When investors finally realize that the earnings aren't real and that much of the value is just financial engineering, the sell-off will be brutal. Now let's turn to crypto. Bitcoin, Ethereum, Solana, Dogecoin, digital coins, digital dreams. You've been told that crypto is the future, that it's decentralized, that it's outside the system, that it's secure. But here's the truth. Crypto is not money. It's code. It's speculation. And in most cases, it's nothing more than belief. Ask yourself, who created it? Who controls it? What is it backed by? In most cases, the answer is nobody and nothing. Crypto has become a gambling market, not a financial revolution. People are betting on prices going up, not on long-term value. And that makes it incredibly dangerous. Crypto as a control mechanism, here's a darker thought. What if crypto was never meant to free you? What if it was created to absorb excess dollars, to distract the masses, to lure investors away from real assets like gold? Think about it. Governments don't like losing control. The US has fought every alternative to the dollar. So why tolerate crypto unless it serves a purpose? By encouraging people to pour money into digital coins, they take pressure off real inflation hedges. They keep people in the casino. They keep the masses distracted. And when the time is right, they regulate it, control it, or even ban it. If you want exposure to the crypto space, look at the infrastructure companies, not the coins. Exchanges, mining firms, blockchain developers. But even then, it's a speculative bet. Don't stake your future on digital dreams. In a world full of risk, gold is certainty. Gold doesn't rely on electricity. It doesn't crash in a bear market. It doesn't care who's president. It just is. And central banks know this. That's why they're buying gold at record rates, while selling US treasuries. John, gold is the insurance policy of the elites, and it should be yours too. It doesn't promise overnight wealth, but it protects what you have. It stores value over time. It outlasts fiat. It survives every storm. As the dollar is devalued and the stock market teeters, gold remains what it has always been. What you can do now, you can't control the government. You can't stop Trump or Powell. You can't fix the debt, but you can control your money. Here's what smart investors are doing. Reducing exposure to overvalued stocks, avoiding speculative crypto bets, holding gold or precious metals, diversifying outside the US, building cash positions for future opportunity. They're preparing for volatility, not chasing hype. And most importantly, they're thinking long-term. This isn't about getting rich quick. It's about staying solvent while others go broke. Inflation isn't going away. It might slow down, it might be hidden, but the cost of living will continue to rise. Why? Because the system requires it. Inflation is how governments repay debt with cheaper dollars. It's how wages grow nominally. It's how the illusion of progress is maintained. That's why real assets matter. That's why cash alone is not enough. That's why you need a hedge. Gold, productive real estate, even commodities. These are the anchors in a sea of financial distortion. Warning signs to watch: rising gold prices, bond market volatility, bank balance sheets, sudden rate cuts, emerging market currency moves. These are the signals. If you see all 5 flashing red, the crisis is accelerating, and once it's in motion, it's too late to reposition. You must act before the panic. The world is changing fast. America's debt is unsustainable. The dollar is under attack. Trump is ready to fire Powell, and markets are skating on thin ice. This may be your final warning. Stop trusting systems built to fail. Start protecting your future, because this isn't just about investing anymore. It's about survival. If this helped you see things differently, drop a comment and I will answer your questions. Subscribe for more honest finance content. And remember, smart money doesn't sit, it moves.